Hey, what's up, folks? This is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Well, today's video is going to be a market analysis and basic Bitcoin chart update. So I wanted to dig into the chart today, see what it's telling us, and see what indicators are there for where we may be moving heading into next week. So we've had a lot of bearish news that's come out this week, and I think a lot of that is weighing on Bitcoin at the moment. And so because of that, I really wanted to take another look at the chart today, tell you what I'm seeing here in the present and where I think this thing may head. So the question is does the McDonald's pattern hold the golden arches, or do we deviate, right? So if you enjoyed today's video, make sure to hit the like button. If this is your first time to the channel, make sure to subscribe. And if you click the bell, you'll be made aware whenever I post time-sensitive content just like this. And now, let's get it going. Okay, so today is January 28th of 2022, and here is your daily update for the Bitcoin chart. So here's what I'm seeing on Bitcoin. First of all, I wanted to mark the chart by showing these lines here where Bitcoin has basically been trading in since roughly the beginning of 2021. It's sort of been in this same channel here. And right now we're kind of heading towards the bottom of the channel. Currently, the EMAs, these are the moving averages of the 20-day, the 50-day, and the 200-day, are all bearish. There's also not really any indication of them leveling out yet and looking like they're going to turn around. So currently, number one bearish indicator is that the EMAs remain in free fall. They are heading downwards. Number two, now, just the other day, we actually had a green volume spike for the first time in about 2 months. That's right here. So that was a real positive sign. But unfortunately, since then, we haven't had any good volume. So it kind of looks like that volume spike may have been temporary. It's a little too soon to tell. But at the moment, we still just really don't have any volume to get this thing moving. So that's bearish indicator number two. Bearish indicator number three, we have this downward trend in the RSI. You can see where I mark this. So that is not really a good thing for us. There's a lot of things going out there in the market right now between, what the Fed's doing, inflation, global instability, SEC investigations into Gemini and Voyager, and there's a lot of negative stuff, I guess, is what I'm getting at. So I think that's what the RSI is kind of telling us, or telling me, is some negative market sentiment. As you can see here, where we are currently, we're kind of right in the middle, but it looks like it's kind of bending over to the side, like it's about to drop again. So I wouldn't be surprised, I guess I should say, at all, if it should decide to drop from here. All right. Now, number four, we also have money outflow, which I was kind of hoping had leveled off, but it looks like it could possibly be increasing again. So you can see that as the red wave here in the market cipher. Really what we're looking is, after this green dot here, we want a smaller blue wave and then upwards, and that would be a trigger wave. That'll tell us everything's going to start moving again. But right now, it's a little too soon to tell exactly what's happening there. At the moment, though, what you can see is that we continue to have that outflow from the market cipher. All right. So money is flowing out of Bitcoin. All right. Now, what all of this means, and I got a question about this in one of the comments the other day, is did I think this may retest the $30,000 level in February? And at the moment, the way this chart looks, I do think that's possible. So, going back up top here to the EMAs and these lines, the channel that Bitcoin's been trading within, why wouldn't it retest that lower level of the channel at some point? I think it absolutely could. And, typically what happens in cryptocurrency is sort of this max pain scenario where right about when you think it can't go any lower, then the whales really dump it. It goes way lower, and that makes retail panic sell. So I could definitely see that happening here. Um, my prediction all along has sort of been that I think that this is probably going to turn around maybe end of first quarter, beginning of second quarter. I think we could probably get a bounce off this bottom channel line from there, and then maybe it'll take off at that point. I've seen some big time predictions of people that think that it could go really big after that in terms of buying impulses. So too soon to be seen whether that actually happens or not. I'm trying to really just focus on the present day chart now, as opposed to what we think should happen and what could happen based on past performance. I'm looking at it currently, and this is what I see. So just to recap again, we've got some bearish EMAs. We still don't have any volume. We've got a downward trend in the RSI, and the money outflow continues. So that being said, keep the DCAs going. This is a great time to do that. I keep adding to mine. I posted a video the other day on Cadena. I've been adding to that one daily. I've been adding to my stable coins so I can keep on buying in situations like this. I've even upped my VGX DCA that I was doing there for a while. I decided to up that one because it's just too good of an opportunity for where it's sitting right now. Okay, so that's it for all I've got today. I hope you all have a great weekend, and that's it for your Friday update. So the verdict for today is I really saw nothing but bearish indicators in the chart. So that being said, it looks like this pattern is going to continue. It looks like we will continue the McDonald's trend into next week. As I mentioned while I was looking at the chart, somebody had asked me about this in the comments, if I thought we would retest 30. I think we probably will. I don't really see any indication why not as of yet. We did have a few bullish indicators early in the week, and those have kind of gone away, right? So now we're back to bearish, so whatever, that's totally fine. If you're doing a DCA approach, you have nothing at all to worry about, and you should be loving it right now. I personally hope it kind of continues into this trend for a few more weeks. I can keep on accumulating, and then eventually things will take off again, all right? So that being said, I think the market itself is sort of flatlined at the moment. It's getting a little boring, as I saw in another post on CT earlier, which is true. But the boring times are the really good times for smart money, all right? So if you enjoyed today's video, make sure to hit the like button. Don't forget that I'm also on Twitter, where you can find me tweeting and retweeting on a regular basis, so check me out there. And for a friendly reminder, this is Jesse with Keeping It Real Finance, the channel that always has your back, tells it like it is, and I will see you on the next one. Later.